I'm Alan Kenny, Editorial Director with REIT.com, and we're in New York at the Waldorf Astoria Hotel for REITWeek 2014, NAREIT's Investor Forum. Joining me is Jeff Edison, Chairman and CEO of Phillips Edison-ARC Shopping Center REIT. So Jeff, quite a bit of growth already for your company, more than 100 properties in the portfolio. IPO proceeds have been dedicated. Give us an idea of what's your strategy for your company going forward.
Well, we at this point have fully employed the equity for our first non-traded REIT, and are beginning to look at some of our strategic alternatives for that first REIT. We're in the process of raising our second non-traded REIT, and we've raised close to $150 million in that second non-traded REIT. So our plans are to continue to aggressively acquire properties to provide strong returns for our investors in the non-traded REIT space, and then to, over time, create liquidity event for our first investors in our first non-traded REIT.
And this second REIT that you mentioned, can you tell us a little bit more about that? What is the strategy? What kind of pace of acquisitions are you looking for there?
Well, it's really the same strategy we had for our first one, which is to buy grocery-anchored shopping centers, what we call A properties and B markets. That's the markets that we're sort of hunting for our properties in. We believe we can get stronger returns there by being in those markets. They're less competitive than the top 25, where a lot of people are shopping for shopping centers these days. And our focus is to buy the number one or two grocer in the market, and to have that grocer doing above average sales for that market. We think that's where the opportunity is. It's what we've done in terms of building our first portfolio in the first non-traded REIT, which we believe is the most consistent portfolio of centers that we've seen in the 25 years that I've been in this business. So we're excited about what we've been able to do in one, and we anticipate being able to do the same in our second one.
And you talked about being outside those top 25 markets. Let's talk about the secondary markets then. What is it that's so appealing in terms of your strategy there?
Well, we actually look at the grocery-anchored shopping center business maybe a little differently than our competitors. We are really focused on what we call delivering goods the last 3 miles to people's houses. We see that as what our centers do. They are the most efficient, safest way to deliver goods the last 3 miles to people's houses. And so when we buy a property, we're really focused on that immediate micro market and how that market works. And when we underwrite our properties, when we buy our properties, that's our main focus. So the way I look at it, there are markets in Detroit we like better than markets in Houston. And there are a lot more good markets probably in Houston than there are in Detroit, but that's our philosophy. And it's really contrarian to where a lot of our peers are looking, which is a real focus on the top 25 markets. And the way we look at it, we think we're buying 100 to 150 basis points better on yield than we would be buying in the top 25 markets. And if you look at the rental growth that we see and the rental growth a lot of people are projecting, we think that there is more growth in these secondary markets, or at least as good a growth in the secondary market rents as you have in the primary markets. And if you look at that, it overall, we think, provides a better return for our investors. And that's why we're excited about it. We continue to shop in those markets for opportunities, and we have a very aggressive plan for two to continue to grow. In the first REIT, I think we bought 60% of our properties off market. We anticipate continuing to do that into our second non-traded REIT.
All right, thanks so much for joining us.
Thanks for having me.
And for more on this and other REIT news and analysis, be sure to visit REIT.com.